Well, thank you for staying with us. Nigeria in recent times has been recording consistent decline in capital importation due to fears by investors around the liquidity in the foreign exchange market. This development has held investors from bringing in capital into the country as much as they were previously. And now, according to the National Bureau of Statistics, the total value of capital importation into the country declined by 2.40% to $1.54 billion in the second quarter of the year, compared to $1.57 billion in the preceding quarter. The NBS, in its foreign trade reports, noted that amount of capital importation from investors in the United Kingdom and United States has declined by $242.03 million in the period under review, with UK investors recording a $1.02 billion, while the US investors sent $82.07 million, a total of $1.10 billion. Meanwhile, ongoing monetary policies of major central banks around the world, as well as domestic factors, including scarcity of foreign exchange, widespread insecurity, and pre-election jitters, have been attributed to the factors that will continue to lead to further decline in the foreign capital importation into the country, if these fundamentals are not, of course, urgently addressed. Well, I introduced him earlier. He's joining me via Zoom. He's the partner, tax reporting and strategy at PricewaterhouseCoopers, Mr. Kenneth Erikume. Thank you so much. It's good to have you join us this afternoon.
Thank you, Tolu, for inviting me again.
Yes. First, I'd like you to make us understand what is happening. Why are we having this decline? Well, some factors have been identified in my introduction, but I'd like you to explain it better to us. What is happening? The United States and the United Kingdom, they're refusing to come in to invest. We need the money.
Of course, we need the money, Tolu. But I think you need to analyze the data and critique it a bit more to understand whether there is a cause for alarm. And my view is that it's not where we should be overly alarmed at the trend of things. When you analyze the data based on comparison with quarter one, there is an obvious drop. And I think that is, the red flag raising concerns at various quarters. But when you look at the data and analyze with Q1 2021 and Q2 2021, it's not that bad. Compared to Q2 2021, there was actually a 75% increase in total capital importation. However, this does not take away the fact that there are critical issues that have to be addressed in order to ensure that, the total portfolio of capital importation actually improves, and we give the international community more confidence in our market. When you really look at the data, there are actually three components of capital importation. We have the foreign direct investment, and historically, that has been a small portion. When you look at the trend in 2021, 2022, it takes up about 10% of the total capital importation into Nigeria. And for me, that's not good enough. And the reason why that's not good enough is because the foreign direct investment is where the patient investors actually bring in funds into Nigeria in the form of equity. And they're happy to stay in the market depending on what's driving them. This could be multinationals looking at long-term investments in Nigeria, maybe in a manufacturing plant or in some infrastructure over time. And for a country, that is where you should optimize. But for Nigeria, that consistently has been trending at about 10%. And then we have the foreign portfolio investment, which is not as patient as FDIs. And this essentially is, investors that are looking at the opportunities in the market to optimize their return. So they make quick investments and then they cash out and exit when there is a change in the market. And this, covers, trading in shares in our stock exchange. It also covers money market instruments like treasury bills, commercial papers, and the likes. Investors, apart from seeing opportunity in the market currently because of certain uncertainties, this has made the capital markets in terms of valuation of companies to be at a very low point. And therefore, investors could see an opportunity there to go in, invest, hold the investment for a while, and then exit. And maybe it is in relation to also yields from the likes of treasury bills and government bonds, because you can't get such yields. Sorry, not government bonds, but commercial papers. You can get such yields, in other markets. Having said that, we can't rest on our oars on foreign portfolio, because like you mentioned, Tolu, central banks across the world are, looking at this issue of inflation coming out from disruptions in the international markets, from the Russia-Ukraine war, and the likes. And many of them are responding by increasing interest rates, which therefore makes it more attractive, to avoid, potential devaluation in a market like ours, and then pick up instruments in other jurisdictions where there's stability of the currency, and now the yields are better. So I think, even though we are attracting the foreign portfolio investments, there are things, going for us. There is need to actually look at, optimizing, like I said, the foreign direct investment. The third category is the other investments, which largely relates to loans, given by foreign investors. And again, like I said, those are not where we should optimize as a market. But like you said, Tolu, we can engage more in this conversation, but there are critical issues that we need to tackle as a country if we're going to turn things around. But we shouldn't be too alarmed, but we should do what we need to do to improve things from the foreign direct investment perspective.
Yes, insecurity is something that everyone will talk about when you talk about investments, because you need to put your money where you believe is safe. The upcoming elections is also something that worries a lot of people, because many say we don't know where the pendulum will swing, and everyone is thinking that what policies might come up from whatever government. And another thing is the big elephant in the cupboard, which we discussed earlier on the show today, issues around liquidity in the foreign exchange market, and how do they repatriate their funds back to their country. Can we touch on all of this and see how it affects investors' confidence?
Absolutely, Tolu. One of the biggest concerns for an investor, especially when you want to invest in this market, and you see the opportunity of the population, you see the opportunity in the market, the potential of the human capital, you would still ask yourself, if I bring in my capital today through the I&E window at whatever rate it is, maybe 420 something, in the future, when I want to get my money out, how will I do it? And one of the biggest, if you're a foreign direct investor, exiting the market is not priority. So you can bring in the funds and remain for a long time. But if you're going into manufacturing, you would ask yourself, how do I pay for my raw materials if I'm importing them? Will I be able to get sufficient FX through the formal banking channels to actually pay for my raw materials? And if I make a profit, would I be able to pay dividends to my shareholders who have invested into this project, and at what rate? Because those investment decisions are critical, for you to say, well, I'm making this investment, I'm making it for the long term, and I'm going to be patient. And as we all know, there are challenges in terms of FX liquidity. So, if we're going to turn things around and improve, FDIs in particular, we have to be, at a place where we are comfortable and we provide comfort to investors, that, when they need FX for their transactions, when they need FX to pay for the profits, which is the return to the investor, there'll be no issue. And when you look at the profile of the investments that are coming in from the capital importation perspective, it's an indicator of the direction of investment. Most of the investments, I think, are more than 50%, and this has been a consistent trend, were in the banking and financial services space. And with banking and financial services, because they have certain availability to FX, investors have more confidence that, repatriation, when repatriation is necessary, would be easier than investing in other sectors. But there are others, sectors, like manufacturing, production, that do like 15% compared to the 50% of banking. So it shows you, where investors are more comfortable to put their money. Okay, and these are some of the reasons. The other thing you touched on, which is crucial, is the issue of security, and this has an operational impact. So from an operational perspective, if I put my investment on ground, would I be able to get the return? And there's disruption in many locations. We have sit-at-home orders in certain locations. We have banditry and kidnapping in some other jurisdictions. Just think about a telecoms company and how they are able to keep their base stations running in different locations across Nigeria. Those are some of the operational challenges that security brings. And then when you overlay that, so we're moving from operational now to the long-term view of an investor. I'm bringing my money in here. There has to be a premium for the political risk and security risk associated with that investment. And some of these issues impact on whether the investor is comfortable to do that. The elections are coming up, and the elections brings its own challenges. Historically, before and during elections, there is, no matter how small, a bit more scarcity of FX. Whatever reasons motivating that, but that has always been a trend. And one of the reasons might actually be that, building up to the elections, investors, because of the uncertainties, they are not investing as much, okay? But there's also the part around, corruption and graft, and how that is prosecuted using, FX. So all of those things interplay and make it, a challenge as you're building up to the elections. But there's the additional question. And this question came up in 2019, actually, or was it 2014? When, in the Northeast, there were challenges with security, and the elections had to be postponed for some additional months. I think it was under the Goodluck Jonathan transition, in order to ensure that, insurgency was pushed back for elections to hold. And those are some of the uncertainties that people have been raising. If we have all these security challenges across different locations as an investor, do you have the confidence, that there'll be proper transition? Because from a governance perspective, that is so important to investors, that there's seamless handover, there's no violence, for them to make that investment right now, and expect a return after the elections. So I think, we've risen to this challenge before as a country. I think we'll rise up to it again. And I'm sure the APC government will do all that is necessary to ensure that, security is guaranteed in the various locations, and we hold a successful election. But those are some of the other challenges from a security perspective. And then we have, so there are many factors, but maybe I should just touch on one more.
Yeah, go ahead, please.
Which is around the issue of ease of doing business. We need to, if we have those other challenges, right? They are really big challenges, but there are simple things we can do as a country to ensure that we give the international community confidence. So we need to improve the ease of doing business in Nigeria. The challenges we have with, the processing of visas for people who want to come out to Nigeria for business visits or for work permits, that has to be seamless at the minimum. We're not a big tourist location, but we're a big working location. So we should ensure, that, we guarantee ease of processing those visas without any single bureaucracy or toll gates to avoid risk as it relates to corruption. We also need to improve the regulatory approvals as a country. So when people apply for things like tax clearance certificates or applying for import permits and the likes, we need to ensure that it is seamless. One of the things that guarantees an effective economy is when government acts as an enabler for the private sector to thrive and not to destabilize and disrupt the private sector. We know government has a critical role to play, but government needs to ensure that, the services that government is supposed to provide, the seamlessness of those services, all of those things are like ducks in a row so that investors have it seamless, both domestic and international investors. And then we need to tackle, obviously, the issue of security. This issue of FX, there are fundamental issues. When we have a headline crude oil price trending above $100 per barrel, when this happened in the past, there was FX liquidity. Today, we don't have that. And for me, it's something that we need to declare an emergency straight away and say we need to rescue the oil and gas sector. Crude oil at this time should be a blessing to Nigerians. And, we need to work together, not just government, but even every stakeholder to ensure that the security of our infrastructure is properly provided for and we are getting the benefits from this resource. I'll tell you what, energy transition is going to happen, I don't think it's going to take more than 30 years from now. But if we produce crude oil at 2 billion barrels per day, 2 million barrels per day, which is like our target, but we're doing like 1 million barrels or even less, and Angola has, overtaken us. If we are doing 2 million barrels per day at 37 barrel reserve, will take more than 50, 100 years actually to exceed our reserves or to use up our reserves. So we stand at risk of having this thing left in the ground when the energy transition happens and we're not able to optimize the value for citizens. So we need to declare a state of emergency. We need to focus on gas because, why I'm focusing on that is because that is a quick win. We can't wait to turn around agriculture, and services. Those things are long-term, but the immediate one we can fix, oil and gas. And gas in particular has been providing dividends, and Nigeria is said to be more of a gas than a crude, country. And we need to unlock the benefits of gas, with liquefied natural gas, with ammonia production plants, and there are many coming on stream. But we need to
that's another big conversation that we need to have, talking about gas and how we'll take advantage of it. And I also agree with you that we are more of a gas country, proven and unproven reserves, than even what we have with crude. Interesting conversation, brilliant one as usual. I've been speaking to Mr. Kenneth Rikume. He's a partner, tax reporting and strategy with PricewaterhouseCoopers. Do enjoy the rest of your week. Thank you so much.
Thank you, Tolu.